Treasury Note yields declined today, moving below 4% for the first time since April 7th, although did close out the session closer to 402, still down about 2 basis points from yesterday's close. Now, taking a step back, since coming back from Labor Day, back on Tuesday of last week, we saw yields touch 430. And since then, it has been a one-way move lower. Yeah, we had a weaker than expected jobs report on Friday, followed later by mediocre inflation data. And today's key component to the move lower was the claims number, which came in at its highest in 4 years. The job market taking center stage, not so much inflation, pushing those yields down as rate cut expectations start to rev up again, expecting a 25 basis point cut next week at September FOMC, along with 25 basis point cuts at October and December FOMCs to round out the year. So yields moving lower and continuing to do so today, closing out at 402, down about 2 basis points on the session. Now, what does this mean for volatility? Well, check out that CVOL index over at cmbgroup.com. And as yields have moved lower, volatility has followed along and then continued to move lower today as yields were in decline. Lastly, let's talk about what we have tomorrow. Tomorrow is Friday. Not a whole lot on the calendar, but we do get the Michigan sentiment, which will have its key 1 and 5 year inflation components. And then all eyes will remain for next week when we get September FOMC. Not so much about the rate cut, but what the Fed will say given their forward guidance, as well as the post-FOMC press conference.